For this session, we will talk about preferential taxation, particularly investment incentives. So, the government provides for these incentives as to investments, of course, to attract foreign and domestic investors into the country. Now, in this session, we will learn the different tax incentives given to our foreign and domestic investors. Particularly, we will outline the incentives pursuant to the PESA law and pursuant to the EO 226 or the investments code. Now, let's start first with your preferential taxation for your investments. So, fiscal and non-fiscal incentives are given for your different investments under different investment laws in the Philippines. So, the aim, of course, is to attract more investors and to make our country investment friendly or investor friendly. So, the government gives certain preferential taxes to these investors or to these investments. So, as I said, our investment incentives are scattered among different laws, but we will mainly focus into two main law, and that is your investment code and your PESA law. But actually, your PESA law is quite outlined with your investments code. Therefore, whatever are given under your PESA law are almost the same with your investments code. So, if you are asking me what are the different laws wherein we have fiscal incentives as to your investments, here are them. First, we have your Omnibus Investments Code of 1987, which we will discuss later, EO 226. Then we have your Basic Conversion and Development Act, or CDA. We also have your Special Economic Zone Act of 1995, RA 7916, as amended. We will discuss this one. This is also known as your PESA law. We also have your Special Economic Zone Acts. So this Special Economic Zone Acts are quite patterned with your PESA law. Therefore, this is quite redundant with what has been presented under your PESA law. But in this particular type of Special Economic Zone Acts, they try to make it more specific as to the place or locality where that eco zone is located. Next, we have your raw and regional warehouses. This was kind of removed or abolished already pursuant to your train law and your create. We also have your Export Development Act of 1994, RA 7844, and Tourism Act of 2009, RA 9593. But again, for this particular session, we will focus ourselves into your Omnibus Investments Code, EO 226, or your investment code, and then we have your PESA law under RA 7916. So let's start our discussion with your PESA law under RA 7916 as amended by RA 8748. Okay, so as you all know, guys, under your PESA law and other preferential taxes that we have discussed, we said and we tried to outline who can claim for these incentives, what can they claim, and how will they claim those incentives. Okay, so for PESA Law RA 7916, who can claim, of course, are your ECA zones. Actually, for your investment incentives, in general, any Filipino or non-Filipino investor may avail of the incentives under the law. So anyone, whether that is a Filipino investor or a non-Filipino investor, they can claim. So long as what is required here is that they will register to the pertinent agency. So since we are talking now under your PESA law, therefore they will need to register under PESA. If we're talking about your investments, they need to register under your BOI. So as a rule, take note, when we talk about your investment incentives, anyone can claim or avail of these incentives, whether that is a Filipino or a non-Filipino investor, so long they register properly and they have the certification that they can get that particular incentive, whether that is an income tax holiday or just a final tax on their gross income. Okay, so let's start now with your PESA law. So under PEZA law, who can claim? Of course, the persons who can claim are those located in your eco zones. So in your economic zone, we grant certain location-specific certain location-specific incentives wherein that business operation is within a pertinent economic zone to qualify for the registration. What is important is that they operate within that particular ecozone, whatever is that particular ecozone. So what happens under PEZA is that the PEZA will locate an ecozone. And if ever there is a business enterprise or operation within that ecozone, they are considered doing business in that ecozone. Now they can qualify for registration with the incentives provided under RA 7916 as amended by RA 8748. And those incentives we will outline later. Now, under your ecozones, the law divides your ecozones pertaining to their business operations. So whether the ecozone is an economic zone export manufacturing enterprise or the business enterprise is export manufacturing enterprise, or whether it is an information technology enterprise or a tourism economic zone locator enterprise or a medical tourism enterprise or agro-industrial economic zone enterprise or economic zone logistics services enterprise or economic zone developer or operator, or facilities enterprise, or economic zone utilities enterprise. So as you can see, when we talk about our eco zones, we have different business operations happening on that eco zone. So here are the different business operations. Now, what you need to learn here is that per business enterprise, they have different tax incentives. So what I want you to remember is that what are the particular incentives applicable to a particular business enterprise operating under that ecozone. So here I outlined the different enterprises and what are their incentives. So certain enterprises have the same incentives. So for our first one, we have your economic zone, export manufacturing, and then we have your information technology. So their enterprise in that ecozone is either export manufacturing or information technology. So what are their preferential taxes? First, you have your income tax holiday, 100% exemption from corporate tax. Remember, as I told you before, when we talk about preferential tax treatment, we must remember what type of tax does your particular business entity can claim as a tax holiday or exemption. So when we talk about income tax holiday, it means exemption. And when we talk about exemption, take note it must be specific. Because as I told you, it is up to the taxpayer to prove about that exemption or that particular exemption. So the burden of proof is with the taxpayer. Now, as to what type of tax holiday does your export manufacturing enterprise or information technology enterprise works in a particular ecozone, the tax holiday pertains only to your income. Take note, the tax holiday pertains only on your income. As you all remember, there are two main taxes that is subject for in a particular business enterprise. That is your business tax and at the same time your income tax. So the law here is specific. When we say it is specific, it only applies your uh, income tax holiday or your tax holiday to your income taxation. Okay. So what are the income taxation? So first, we have your 3 years income tax holiday if ever that is an expansion project. 4 years income tax holiday for non-pioneer projects, and then 6 years income tax holiday for pioneer projects. So what do we mean by non-pioneer and what do we mean by pioneer? So when we say it is pioneer or non-pioneer, actually it is based on the definition of your Bureau of Investments or your BAI or your investments code. So under the investments code, when we say pioneer projects, it means that these are certain business enterprises or business transaction which are not yet being done here in the Philippines. So it is first time. It is a first time operation of that particular business in the Philippines. So for example, let's say in the Philippines, there is no particular entity or enterprise which manufactures for IT related concerns. Now you are working in an eco zone and you will put up that kind of enterprise. So that is the first time that there will be a particular manufacturing or production of that IT related business or IT related product. So since it is a pioneer project or pioneer project or pioneer product, it has a 6 year income tax holiday. Take note, these are not yet being produced. Okay. So when we say pioneer not yet produced here in the Philippines. How about your non-pioneer projects? So when we talk about non-pioneer projects, it tells or refers you about those products which had been uh, already in production in the Philippines. So if pioneer projects are not yet in production, so non-pioneer are already in production. So for example, we are already producing, let's say we are already producing shoes, and then you will place on that ecozone shoes, then we can consider that as non-pioneer project. Okay, expansion project, of course, to expand. Take note, the income tax holiday is only for your income taxation on your corporate tax, because normally these enterprises are corporations. So when I say 100% exemption, normally 100% exemption on your corporate tax. Now the question is the 8 year, is the 6, 4, and 3 year income tax holiday fixed? Actually, no. Actually, no. Upon expiration, you can extend up to 8 years from the start of operation. So for example, you started your operation 2013, and then you had an expansion project. Expansion project. So you have 3 years. So 2013, 2014, 2015. So you have until 2015 for that IT age. And you can expand it up to 8 years from the start of your operation. So since your start of operation, you can extend additional 5 years. So 2016, 2017, 2018, 2019, 2020 until that. So if we count the expansion, the expiration of your income tax holiday, we will not count it from that time. We count it from the start of our operations. So our operations is 2013. We have previously encountered 3 years income tax holiday. We can still extend up to 5 years. But what if you have 6 years income tax holiday? You can extend up to 8 years. Therefore, you have additional 2 years. Okay, that's how your income tax holiday extension of your expiration of the income tax holiday. So take note of the years: 3 years for expansion, 4 years for non-pioneer, 6 years for pioneer. Pioneer not yet in production, non-pioneer already in production. Aside from that, after the expiration, so let's say it is already expired. So it expired, and then suddenly you try to extend. After extension, it already expired also. Once it expires, you are now entitled to 5% final tax on gross income. 5% final tax on gross income. Third question, what do we mean by gross income? Okay, gross income is still defined the same with your gross income under the BESO law. That is equal to your sales less cost of sales. Now, when we talk about cost of sales, these are your direct costs. These are your different direct costs. Now, the problem here arises as to your PESA law. And what is the problem here? The problem here is that under PESA, there are registered activities and non-registered. So when we say registered activities, these are the activities which you can claim the fiscal incentives, while non-registered activities are activities wherein you cannot claim for the fiscal incentives. So what do we mean by 5% final tax on gross income? So this gross income must only pertain to those registered activities. So when we say registered activities, again, these are the activities wherein we have your fiscal incentives registered under the PESA. Now, sir, what if we cannot segregate those? If you cannot segregate it, then you properly allocate it between registered and unregistered activities. So, for example, you have your sales registered, sales unregistered, and then suddenly you have your cost of sales. You cannot segregate it. So let's say your sales registered is 10 million, sales unregistered is 2 million, and then your total cost of sales is 1 million pesos. Now, if ever you are to compute, if you are to compute, the cost of sales must be properly segregated. So when we say properly segregated, you must point it out whether it is for registered or unregistered. Because when we talk about gross income, it pertains only to purely your registered activities. So what you need to do, you should segregate it. Question is the problem if ever you cannot segregate it. Because when we say segregate, you do specific identification, meaning you identify whether that particular cost is for your registered or for your unregistered or non-registered enterprise. But what if you cannot really segregate it or you cannot specifically identify it? So you can allocate it based on any relevant data if applicable. So here, what is our relevant data? Our relevant data pertains to sales. So if our 1 million, you place it to your registered activities. So we have here 10 over 12 because our total sales is 12 million. That is the amount you will place under your registered. And for unregistered, we have 1 million multiplied by 2 over 12. Okay, take note when we talk about 5% final tax on gross income means sales less cost of sales. However, this gross income, 5% final tax applies only to your registered activities. Question or issues arises if ever we have both registered and non-registered. Then how should we do it? When there is a registered and non-registered activity, as much as possible, we segregate it through a specific identification. If you cannot segregate it through specific identification, you must try to allocate it between those activities based on any relevant data. So in this example, our relevant data is the sale. So we try to allocate the amount through your sale 10 over 12 and 2 over 12. Next, we have your other preferential tax for export manufacturing and information technology enterprise. We have your zero-rated VAT on local purchases. So what is this zero-rated VAT on local purchases? So when we say zero-rated VAT on local purchases, this can either be purchases of your materials or supplies used for your operations, or either purchases of goods, services, or properties. So any purchase, whether the purchase is for raw materials or purchase of your services. So it must be zero rated, meaning it is not subject to output VAT. On the part of your seller, it is considered zero rated. So no output VAT, zero output VAT. However, for the part of buyer, we are the buyer here. Since you have zero rated VAT on local purchases, no input VAT, no input VAT on the part of your eco zone. Okay, so there are three incentives on your export manufacturing enterprise and information technology enterprise. And what are those? Income tax holiday, either 3, 4, 6 years. And then we have your 5% final tax on gross income. And then we have your zero rated VAT on local purchases. Next, we have your tourism, medical tourism, agro-industrial enterprise. So what are the fiscal incentives under this? So under your tourism, medical tourism, and agro-industrial, they can only claim for 4 years income tax holiday. Sir, why is it 4 years? Because tourism, medical tourism, and agro-industrial, it's already considered non-pioneer. Sir, why do we say it is non-pioneer? Because for sure, there will always be a medical tourism or any tourism industry here operating in the Philippines. It is not the first time that there will be an operation of tourism, agro-industrial, or medical tourism. That's why it is always 4 years at most. And sir, why is there no expansion? Because generally, when we say expansion, we expand our market. So tourism does not really expand its market because what you really apply only for your tourism is it's either here in the Philippines or your target market. So generally, 3 years and 6 years does not apply to these items. That's why they are only subject to your 4 years income tax holiday. Again, when we say income tax holiday, you are not to pay any income taxation for that 4 year period. And the question here, sir, can it be extended? Again, this 4 years can be extended up to how many years? 8 years, counted from what date? Counted from the time you started your operations. Aside from that, they can also claim for your 5% final tax on your gross income. And when we say gross income, again, please do not forget, it only means one thing, that is your net sales less your cost of sales, particularly only on your registered activity. If not, then you specifically identify it and try to segregate. Lastly, you can also claim for zero rated VAT on local purchases. Local purchases. Okay? Next, we have your economic zone on logistics services. So, logistics services. Under logistics services, they are only exempted on export duties and they have zero rated VAT on local purchases. Because generally, there's logistics services, they are not new, and we have much logistics services. What we try to put up in our ego zones are certain industries that are should be new for the Philippines. But in this case, for logistics services, I think that's why they are only given exemption on export duties. Sir, why export unlike the others? Because generally, when we say logistics services, they deliver goods from one place to another. So if ever they will deliver outside, they can claim exemption on your exportation. Okay? And also, they are subject to your zero rated VAT on local purchases. Actually, your logistics services has the least incentive among all those enterprises uh, working on a particular ecozone. Next, we have your zone developer or operator. We have your facilities enterprises and your zone utilities. They don't have income tax salary, but they have 5% final tax on gross income and zero rated on local purchases. So when we say 5% final tax on gross income, still we have the same definition. And what is that 5% final tax on gross income? That is net sales, that's cost of sales of registered activity multiplied by 5%. Okay? Take note, it is final tax, therefore you will not pay anything after that particular gross income. If you will try to look at it, it is like your gross income tax, wherein you are subject to 8%. Remember that in your individual taxation. Now here in PESA, we have your 5 gross income final. Okay, so again, what you need to take note here in your PESA law is who are who can claim for the incentives here and what are the incentives. So there are different enterprises within that ecozone, and per enterprise, they have different preferential tax treatments. So as you can see, we outline them in tabular form from the very first one up to the last type of your business enterprise. Now, the next question is, how can you claim for the fiscal incentives under your PESA? To claim for your fiscal incentives under your PESA law, you need a certification from PESA under a delegated authority by the Fiscal Incentives Review Board. So actually, it must be the Fiscal Incentives Review Board who should give for that particular exemption. But as I told you a while back, if ever you will avail any incentives based on your investments, you must register with the pertinent agency. And who are the pertinent agency under your economic zone? It is known as your PESA. So again, the agency is known as your PESA. Now, how do we claim? You need PESA certificate. So what are those PESA certificate? First, certification on entitlement of 5% gross income tax if you will go with your gross income tax. Take note, ITH first, and then you can extend this one up to 8 years. And then after the expiration, you can now claim for the 5% gross income tax. And also, you can claim for through a certification on available incentives, whatever are the incentives, whether that is fiscal or non-fiscal, whether that is fiscal or considered non-fiscal. Okay, so take note, when we talk about ecozone, this is an area or enterprise that uh, has the potential to be developed. And as I told you a while back, we have your general PEZA, which is your PEZA law, and then we have your special PEZA laws, such as your Subic Bay Free Port Zone, your Clark Special Economic Zones. Generally, the eco zones, these ecozones are also entitled to the same benefits and privileges under PEZA registered firm. So, diba, we have your PEZA and we have these different special laws relating to your economic zone. So, whatever we learned here in your PEZA actually applies still to the economic zones under these special laws. If you still remember, we have your Sambuanga as an eco zone. What else? Specific Cagayan. We have here in Tugigaraw, Cagayan. We have your Sesla Cagayan Economic Zone. And then we have also one in your Aurora province, and last one we have in Bataan. Okay, so we have here special economic zones law pursuant for Zamboanga, Cagayan, Aurora, and Bataan. And as I told you, whatever, PEZA is like the general law, they just made it specific among these four areas. So if ever you are asked what are the four areas in the Philippines which has a specific PEZA law, we have your Zamboanga, Cagayan, Aurora, and Bataan. Okay, so we're done with PEZA. Just take note of the different enterprises, what are their fiscal incentives, and how can we claim for those. So again, just like any other preferential tax we discussed, there must be a certification which shows for that particular tax incentive. Now we go to our last topic for our investments incentive. We have your omnibus investment code. Omnibus investment code under EO 226. Actually, your omnibus in omnibus investment code is the very first government policy on investment initiative. So again, on the omnibus investment code, just like any other laws under your investments, applies to whether you are a foreign or a domestic investor. So the Omnibus Investment Code of 1987, of course, integrates the basic laws on your investments, which harmonizes the provisions to encourage and guide domestic and foreign investors. So it is a breakthrough law regarding your investments. That is your EO 226. Now, who can qualify for your omnibus investment code? So we have here your qualified proponents. So who are these qualified proponents? These qualified proponents must invest in priority areas of activity. Sir, question, what is your priority areas of activity? Actually, your priority areas of activity is listed in the IPP. The IPP is known as your investment priorities plan. So what is this investment priority plans? The investment priority plan are plans which identifies investment areas eligible for incentives. So you just lay out those investment areas eligible for incentives. Sir, what do we mean by an investment area? When we talk about investment area, that is any business enterprise or business area wherein we need more investors. So for example, we need more investors for medical field. We need more investors for your certain areas such as your ARMM or in Mindanao. So that can be considered as part of your investment priorities plan. Sir, question, is our investment priority plan fixed? Actually, your investment priority plan is not fixed. Your investment priority plan is always revised annually. So there will be always an annual listing. So it is annually, guys. There is not there is no fixed investment priority plan. It will change annually. So there will be an annual list of activities or undertakings which are considered priority areas. Considered, of course, critical for our country's attainment of economic growth and development. So generally what we have here, again, as I told you in your investment priorities plans, are different business enterprises, which can either be an activity or undertaking or a certain area here in the Philippines, that if ever you have a proposed plan there, which is considered as a priority area, you can be considered as a qualified proponent. So any investor. So when we say qualified proponent, any investor, whether that investor is a Filipino or a non-Filipino. Okay, so what are the incentives here? So we have the following incentives. As I told you, Omnibus Investment Code is the general law among all of your investments, and whatever is given on your Omnibus Investment Codes also apply to other investment incentives. So a while back, we talked of a specific investment incentive under your EcoZone PEZA law. And what have you learned about this PEZA law, EcoZone? In your PEZA law, EcoZone, we just need to look for the enterprise and we need to determine the different incentives. However, here, we don't need to qualify. No need for qualification. Meaning, so long as you are investing in a priority area. Sir, how will we know the priority area? Based on your investments priorities plan. Sir, how will we know the investment priorities plan? Annually, there is a change or a listing of your investment priorities plan. If you have a proponent under that priority activity or priority areas of activity, then you can claim under your Omnibus Investment Code. Now, as I told you, your Omnibus Investment Code being the very first law for your investments is just like the same incentive among your other investments incentive. So a while back in PEZA law, we talk about your 3, 4, 6 income tax holiday. That still apply here. So here in your investment code, so long as you have a qualified proponent or qualified investment under priority area, you can claim for ITH. So 6 years for pioneer projects, 4 years for non-pioneer projects, and 4 years for expansion projects. But take note here on your 6 years. It is not only pioneer, but also project located in LDAs. So what is this project located in LDAs? So when we talk about LDAs, these are considered least developed areas. So if we have a least developed area and we have a project there, you can claim 6 years ITH. So when we say 6 years ITH, it is regardless of status. Sir, what do we mean by regardless of a status? If that is LDA, generally 6 years, regardless of status. When we say regardless of a status, whether that is considered pioneer or non-pioneer. Furthermore, it is regardless of your type of project. So when we say type of project, whether it is considered a new project or just an expansion project, right? Whether it is a new project or an expansion project. Clear? Okay, so you have ITH. What's new here is ITH on your LDAs. LDAs, it's known as a least developed area, and you can claim 6 years ITH regardless of the status, whether that LDA status is a pioneer or non-pioneer project, or whether that is considered a new project or just an expansion out of your new project. Furthermore, another incentive that they can claim is your tax and duty-free importation of breeding stocks and genetic materials. So you know what is a breeding stock and genetic material pursuant to your Tax 101 or business taxation. So generally, these are used for your agricultural production. So they will be exempt for the payment of all taxes and duties as to the importation of your breeding stocks and genetic materials. Okay, agricultural production. Next, we have your additional deduction for labor expense. So what is this additional deduction for labor expense? Actually, this only applies for the first 5 years from the date of registration. Okay, so a registered enterprise from the date of registration, they can claim additional 50% for the 5 year period, additional 50%. So for example, we have here wages, registered activity. 1 million pesos, they can claim additional 50% pursuant to this one, additional deduction for labor expense. So they can claim now 1.5 million total for labor expenses. Take note, that is only for 5 years from the date of registration, and you cannot extend it. Unlike the others, ITH, you can extend it. Here, the additional deduction for labor expense, no, it's only for 5 years. Okay? And furthermore, you can claim 100% if located at LDA. Okay? So additional deduction for labor expense, general rule, it is 50%. Exception to the rule, 100%. Additional 100% if located in LDA. So for example, wages, 1 million. If located in the LDA, you can claim additional 100%, total of 2 million pesos. Okay? Additional deduction for labor expense. Lastly, we have your zero rated VAT. So when we talk about zero rated VAT, just like a while back in your PESA, that's zero rated VAT applies to purchases of materials or supplies, including purchases of services. So any purchase, so long as it is VAT, if ever will buy, we have a zero rated VAT. Therefore, no input VAT. There is no input VAT because it is zero rated VAT. Now, how can you claim? You just need a certification from the BOI that you have registered a priority area of activity, and you can claim all of these incentives. So what we have learned with all of these types of preferential taxation, you just really need to prove that you have an exemption based under the law. And generally, that exemption is based on a certification. What you need to focus here are the different incentives applicable on a particular investment area. If that investment area is within an eco zone, you go to the PESA law. If that investment area is within a priority area of activity pursuant to your IPP or investment priority plan, therefore you go with your omnibus investment code. Either way, omnibus investment code and PESA law talks about your investment incentives under your preferential taxation.